Hello, everyone. Happy Friday, and welcome to another episode of Finally Friday from Optimus Futures. This is your podcaster, Matt Z. Had a very interesting week. Spoke to potential customers, and one of the potential customers have asked me if I have software that would allow him to stop trading at a certain point and just close him out. So I have been asked this question before from traders that find the discipline is something that they find very hard to attain, and they are looking at some sort of a software that would basically stop them from trading again if they hit a certain limit or a threshold financially that they don't want to extend beyond. And I never thought about this before in the way that I'm thinking about it now, but as I evolved the conversation with this potential customer, and again, every single conversation is different in a way. Most of the conversations is the same. What's your commissions? What's your margin? Which clearing firm you recommend? What software you should trade on? But, once in a while, I have a customer who's asking maybe the same question, but we take it into a completely different angle. So essentially, there is a group of people out there that keep on asking about this software that would simply stop them from trading at a certain point. And it's possible to implement it. So what I did on our software, I implemented something, Optimus Flow, that is. I implemented something that would simply trigger a loss, a certain amount, or a profit if they attained it. And there's a pop-up button that would say, hey, you reached your target or you reached your loss for the day. And again, it's just indicates some points. Of course, by the time you close it, your loss could be slightly more, or your profit target could be slightly less. But essentially, it's around that figure that it's from a point value that it pops up, and then you have a choice to liquidate the position and cancel all the open orders. But customers want more than that, or certain customers want more than that. Certain customers say, hey, I reached the limit, but close me out of the software entirely. Now, from a programming standpoint, you can do that. The question that I've asked, that certain prospect or potential customers, we call them, is whether this type of feature, if it's implemented, would it really stop him from every single non-disciplinary action? Well, should I say non-disciplinary? Well, what I meant to say is that if I implement that thing, right? If I implement that software where he simply cannot control himself. So he lost a bunch of money, and then he goes into some sort of anger, or maybe he goes into desperate or whatever out of control mode that there is. If that would help him and improve the results. And if he thinks that just it's the only element out there that would help him out, meaning that if I implemented that on the software, let's say, that if you reached a certain level of financial and locking you out, would that improve your results in the long run? And for me, it was a very clear answer. I never ask questions because I think some of those questions are obvious, or it's a theoretical question, or it's an obvious answer, because I always look for the feedback. I'm not that narrow-minded to say just because my experience points out in one way, there could be an experience from other people that is a different way. But the question is, if that one feature was implemented, would somebody end up with better results? Now, I have customers, not many, but a few over the years that I've lost to other brokers because I didn't have that feature, and they had that feature. But some of them, called me back and they said, "Hey, I want to come back." And I asked them, "Did that feature really help you? Did it make you a better trader?" And the answer is no. And I'll tell you exactly why it's no. It has nothing to do with that specific feature. If you cannot stop yourself, if you don't have a discipline to stop yourself in one area where it requires discipline, it's unlikely that you developed the discipline to stop yourself in other areas. You cannot create mechanical, well, I should say this is my opinion. You cannot create mechanical constraints around you through a platform to control your own discipline, because there is an endless amount of errors that could be committed because of psychology of trading. So let's assume that I stopped somebody from operating a platform if they lost $500 or $200, whatever the amount is relatively to their account size, and they would not be able to trade it until the next day. What prevents them from being impulsive and entering orders? What prevents them from getting out too early or putting stops that are just way too tight to the market that requires a discipline of looking at market range? What would stop them? And the answer is nothing. So the question is, how many features do you think a platform should have before you change your behavior, before you start taking control and responsibility for your own behavior? And there isn't a machine in the world, there isn't enough mechanical constraints that a platform could have to make you a better trader if discipline is your issue. Because lack of discipline doesn't only manifest itself in having the ability to control your losses. It's also your entries, it's your trade management, it's your impulsiveness. There is no control for that. Now, another question that I always ask myself, let's say somebody lost $200 in the trade, okay? And that's because they just, they didn't want to lose that amount of money. They lost, let's say initially they traded, let's say a small micro contract, and they lost $100, and then they were trying to recover it, and just impulsively, based on emotion, lost another 100. How does the software distinguish between one person that lost 200, for lack of a better word, legitimately, meaning he followed his method and the market didn't play? Should he also be locked out of his software? So think about two people who lost the same amount of money, but the chances are about the next day of how they're implementing things. So one guy lost because of lack of discipline, one guy lost because he was disciplined, but the market didn't play his way. So, why should one be stopped and the other one is not? What if the other guy has a chance not to be impulsive, continue trading with his method and try to recover it? And so when I pointed it out, to the person, we both agreed that at the end of the day, you have to control your discipline when it's coming from within and not look for discipline in a machine. A machine will not give you discipline. And this is very, very important to remember. A guy who lost $200 because he became overly impulsive should walk away. Honestly, he should walk away. But a guy who lost $200 because the market didn't play his way, well, look, if he has the ability to withstand financially another $200 loss and he wants to recover it, but it is a disciplined trader, then he should continue trading, in my personal opinion. Because again, his trading is based on the method, not emotions. Well, everybody's emotional to a degree, but I digress a little bit. So The point that I'm trying to make is this, is that anybody out there that is looking to improve discipline through other means than controlling yourself will discover that mechanical things are not the solution. I also had another email from a really good customer of ours, and he asked me if he should take that course, a certain course. Somebody he looked at, and somebody he stumbled upon. I've I don't recommend authors, or educators. I try to be very objective, and I tell them if they do their due diligence about the person, then they should make their own conclusions. But the matter was that he told me about certain things where he's, again, loss of control over certain trading situations. So the issue was, that he's losing control when he's trading, but he's trying to find that solution through a new trading course. I said to him, what is the trading course got to do with it? Trading courses teach a method, that teach a way to look at the market. I mean, not all educators are, equal in terms of the insight they give you into the market. Some people have more depth and they're experienced, and some people are not. But nevertheless, an educational course is just a new method to look at the market. It doesn't make you methodical. It doesn't make you disciplined. It doesn't give you some sort of a new framework, or I should say a new work ethic when it comes to the market. So decide for yourself, whether what you're trying to fix in your discipline is really in the solution that you're looking for. Now, I'll be very honest with you. I really understand trading psychology on many levels. And on many levels, I truly do not. I am failing truly to understand why wouldn't a person walk away when they hit a certain level of loss. I don't understand this obsession to make it the next minute, and instead of taking a deep breath, realizing, look, not every day can be good, and some days I just have to walk away. Part of this idea of that, they throw out there, cutting your losses short, it's also a mental exercise of knowing when to turn it off and just walk away. And you can have a week of losses, you can have a week of wins, and both of them you have to control your emotions. You can't get overly depressed when you lose, and try to recover your losses in a controlled way. And at the same time, when you win, you can get overwhelmed and think that every day will be like this, and then you go and you over leverage, and you want to make more, and then greed comes in. But there's nothing mechanical out there that would actually stop you from that, from doing those things on a daily basis. So again, discipline starts from within. It's not exterior. It's not in the trading platform. It's not in the new educator. Maybe it's something else. Maybe you need, to relax a little bit in your life. Maybe you need to meditate. Maybe you need to do yoga. Maybe you need just 15 minutes of quietness in your life to do that. And hopefully, that gives you a new level of discipline. Now, let me just make something very, very clear. When I say I don't understand, it's really not because I'm putting down anyone, because I've been encountering this for 20 years. It's really a serious phenomena out there that, since we started trading online, watching prices all day, watching charts, watching graphs, it does something to, the human psyche. It does something to human behavior, and now we have the ability to trade from the phones. We have the ability to trade from the web, so you could trade from work. Well, if you're working from home, then you have a platform. If you're out and about, you have the prices are moving on a dome, on a trading platform that creates impulsiveness. You're like, oh, I'm going to take a position. I think this is too high, too low. So it created something. It definitely broke discipline in many ways. So I'm not looking at lack of discipline in any type of accusatory way. It's just I'm trying to make people and my traders and my customers and the trading community, trying to help them as much as I can, just to make them very conscious of it. And I've seen it happen. So in my 20s, which was quite some time ago, I used to do broker assisted business. And customers didn't have access to quotes, didn't have access to charts, they didn't have any of that. And essentially, I would say they would call every few hours and they would say, hey, how's my position doing? Or they would call and they would say, when am I getting my statement? I just want to look at my statement that comes in the mail. Those days are gone. Clearly, indices are much higher. Volatility is because the indices are so high. The ranges have become higher. So that world is long gone. But the interesting thing at the time that and you know what? Maybe I'm wrong, because I wasn't a broker in the 60s, in the 70s, or in the 80s. I just did a few years of right before the electronic markets came. But from what I remember and what I saw, what I observed, I never saw this kind of lack of discipline that we have today. I really didn't see it. And I'm not saying the markets at the time were any easier. I don't believe that they were easier in the 30s or in the 40s or now, and I've expressed it many times. But clearly, sitting in front of the screen all day and seeing things move up and down always creates an opportunity in the mind. And so, it's this thinking that, I can recover my losses, or I can make more, and the market is still moving. It's just affecting you. So I really believe that there's a certain level of consciousness that you have to be aware what's around you at all time. And I point out, the difficulties and the challenges in trading, so you understand it as well. If you're a new trader to the markets, doesn't matter what asset class you trade, just so you know, you will get kind of, I don't know if it's the right word to use, but you will get addicted at looking at the screen. You'll get addicted looking at prices on an ongoing basis, and you'll have to internally fight that impulsiveness in you to overtrade, learn, and control yourself, because definitely the platforms are just becoming better. And I think as they become better, and I'm talking not only from an execution standpoint, I'm talking from where they're accessible, their graphical display, even the people who design the GUI. The interface design itself. They make it easier and easier to trade. Locate the trade button, the dome, the charts, and it's part of making software better. But what it also does along the way, it creates impulsiveness in us. So, going back to, our first discussion of this podcast, that software in itself is not the solution to your disciplinary problems, because you cannot incorporate every single concept of discipline into your trading. One last thing I want to point out, that please don't think that that software doesn't help. Software helps in trade management with good features to those people that obviously, professional traders and experienced traders, and hopefully the disciplined trader that you should become. There are functionalities out there that will help you manage trades better, no question. Anything from OC orders or conditional orders or anything like that to take advantage of different market scenarios. But don't confuse that with certain aspects such as risk management, and that's where it really should come from within. In any case, I hope you enjoyed this podcast. Let me just give a plug to my great staff at Optimus Futures. Go to our website at www.optimusfutures.com. Please ask for a demo of Optimus Flow, our trading platform. It's a white label platform that we created, and so I hope you get a chance to examine it and trade on it. And again, my Optimus Flow will not make you disciplined, but it could definitely help you in trade management. So give it a shot, give it a demo, and see if it works for you. I think you'll enjoy it very much. Obviously, as always, I just wanted to point out that there's a substantial risk of loss in futures trading. Past performance is not indicative of future results, and please trade only with risk capital. Do not put yourself at risk that you cannot afford. Your lifestyle, your livelihood are very important, and trade futures with risk capital. If you currently don't have risk capital to trade futures, clearly, you should not trade right now and save towards that goal to have risk capital. And also, if you do have risk capital, maybe you should consider smaller size contracts such as the micro S&Ps, micro NASDAQ. Now we have the micro crude as well. So just, smaller size contracts just to kind of learn and not start off with the big contracts right away. In any case, wishing you a great Friday, a great weekend with your friends, your family, and everybody else. And I'll see you hopefully on next Tuesday on the new podcast. Thank you, and have a phenomenal weekend. Take care. Bye-bye.